Aotearoa, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The US Senate has agreed the Trump budget, but only after the Vice President broke a deadlock with a casting vote. Financial markets are wondering about the wisdom in all of this, with equities hesitating, bond yields turning up, and the US dollar drifting lower. To be fair, none of these movements are large today, but the implications of massively high US debt levels are, as is the opening of the magic money accounting they've adopted. It'll be the bond market that makes the practical judgment. First, however, the overnight dairy auction came in as weak as the futures market suggested it might. The skim milk powder price fell 1.7%, but only to match the prior week's pulse event. However, the more important whole milk powder price fell 5.1% and back to levels last seen at the beginning of the year. One local reason may have been the sharp increase in volumes offered, 10,000 tonnes more than the prior event 2 weeks ago, and 6.7% more than the event in the same week a year ago. This volume jump came after milk production rose in all key producing regions except Australia. Overall, prices were down 4.1% in US dollar terms at this event, down 5.2% in New Zealand dollars as the greenback weakens further. The price downshift will have analysts reaching for their pencils, although it might be too soon for them to backtrack on their 25-26 payout forecasts. Fonterra's current season results are pretty much locked in and will be reported in late September, but their new year may be off to a soft start. Last week, the US Red Book Index was 4.9% higher than a year ago, but it's still in the easing trend it started in early April. And the May level of job openings in the US rose unexpectedly to more than 7.7 million, largely in a surge for food service jobs. Analysts didn't see this coming, but perhaps they should have given the sharp ICE immigration crackdowns underway. These roles at these volumes will be hard to fill. The latest factory PMI report from the ISM in the US shows that a sector still in contraction, being led by weak new order inflows. The internationally benchmarked S&P market version reported an expansion, and a moderate one at that, but both noted rising inflation pressures. It appears that the expected rise in June car sales in the US didn't occur, dipping to its lowest pace of the year. And apparently it's a good time to be in the logistics sector in the US, with inventory levels rising and supply chains being stressed. The Logistics Managers Index is running at an unusually high level. And the Dallas Fed Regional Services Survey reported a continuing contraction, although not as steep as in June as in May. And the Real Clear Markets Economic Optimism Index was expected to bounce back in July, but in fact it resumed a decline in a trend that started in December 2024. After falling to a recent low in April, Japanese consumer sentiment is on the rise again, back to where it was at the start of the year, but not back yet to 2024 levels, but at least it is rising. And yesterday we noted the official factory PMI for China improved, but was still showing a contraction. Today, the alternative Kaizen factory PMI came in a little better than that, rising from May's tiny contraction to June's small expansion. These shifts don't mean a lot, but at least they're going in an improved direction. The Kaizen survey noted high new order inflows supported a renewed rise in production. That said, the rate at which new orders expanded was only marginal amid subdued exports. Trump's trade war may have kneecapped Chinese growth, but it hasn't knocked them over. Overnight, the ECB released the results of its May survey of consumer inflation expectations, and they dipped to 2.8% when a small rise was expected. Consumers apparently thought inflation was running at 3.1% over the past 12 months. Separately, the EU released its June CPI data, and that shows it running at 2%, up from 1.9% in May. In Australia, large parts of the east coast is hunkering down for a lashing of strong winds and heavy rain, and that will include Sydney. The US Treasury 10-year yield is now at 4.25% and up 2 basis points from yesterday at this time. And the price of gold will start today at $3,337 an ounce, up $45 from yesterday. And American oil prices are marginally firmer, at up 50 cents at just on $65.50 a barrel, while the international Brent price is up the same at just on $67 a barrel. And the Kiwi dollar is now just on 60.9 US cents, unchanged from yesterday. Against the Aussie, we're down 10 basis points at 92.6 Australian cents. Against the euro, we're also down the same at 51.7 euro cents. That all means our trade-weighted index starts today at 68.2 and unchanged from yesterday. And the Bitcoin price starts today at $106,292 and down 1.3% from yesterday. Volatility over the past 24 hours has stayed low at just over plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.